So I'm going to jump right in because this is going to go really fast. We're here to talk about playing the long game. I don't know that there's anyone more appropriate than these three powerhouses up here to talk about the long game in terms of the markets and what we should be doing, thinking about it, what's the outlook. So I'm going to start with you. Okay. Recently, you talked about some of the global pressures, including, and I think I'm quoting you, the bifurcation of the US and China relations, in addition to the continued conflicts between Ukraine and Russia, Israel and Palestine, which don't seem to be slowing down. And of course, we have the tariffs. So I would love for you to weigh in here. What is your outlook? What are you seeing? Why shouldn't we be as terrified as you know, most of the pundits say we should be?
So firstly, thank you so much to Forbes and thank you to Manit for having us here. It's such a pleasure to be on this panel with my rock star friends this afternoon, so we're gonna have a lot of fun. First of all, the environment today really reminds me of that movie, Everything, Everywhere, All at Once. And we are in an environment that is so different from a normal cycle. I think we have layered volatility in the marketplace today. So we start with the economic volatility of what's happening with tariffs, what's happening with rates, with inflation, with debt. You have on top of that geopolitical volatility. So what's happening with the unrest around the world. That's why you're seeing so much money and focus in defense, for example, as an industry. And then on top of all of that, you've got the bifurcation of US, China, and the nationalistic deglobalization volatility that's happening at this moment too. And so what does that mean for investors? That means that supply chains are changing around the world and very interesting opportunities are arising in different geographic focused regions like Southeast Asia, like India, for example. But overall, some of the themes that we talked about this morning are very prevalent. That is that the future is AI. And by the way, it's not just AI, it's all the industries that supply, fuel, and drive AI, including semiconductors, including when you think about the energy that's going to be needed to drive the growth in AI. So those are definitely very compelling long-term investment ideas. And we've also heard a lot this morning about private credit, about co-invest and direct investing. I think that's absolutely the future. Investors definitely are still interested in the United States. They view it as a wonderful place to invest, but instead of public markets, they're looking at some really unique, interesting investment ideas, very much directly and in co-invest vehicles.
Yeah, and you know, in the prep call, there was some conversation about why is this moment of volatility a little different than others? Some conversation about why it being man-made makes it feel a little different. Could you weigh in on that for us? Why does that make the reaction that investors should be having also different?
Well, I think the reaction has been very different for the reasons I just mentioned. This is unlike any cycle that we've ever seen. We've got so many confluence of events happening, but it's also an interesting time because when there's volatility, when there's uncertainty, there's also a tremendous amount of opportunity. And as I said, as we've been looking through opportunities for clients, that includes the industries that are really unstoppable in our opinion. It's AI, it's tech, it's healthcare, it's clean energy going forward. And it's also looking at alternatives to traditional ways of investing. And as I mentioned earlier, looking at directs, co-invest, you know, different types of ways to participate in secondaries that are really going to bolster portfolios going forward.
Yeah, great. Sonia, this one's going to be for you. At the start of the year, there was real excitement about the level of deal activity. That was the outlook, that's what we thought. But instead, of course, what we're seeing is big backlogs for private equity firms, companies remaining unsold, some starting to ring the alarm bells even. Curious, what do you think this means for deals, and is private equity less attractive, or is there some silver lining there that that investors should be thinking about?
Yeah, I don't think that private equity overall is less attractive. I mean, there are still mega funds being raised. I mean, certainly the slowdown in the M&A activity or exits is frustrating and not great for the LPs, but that's also really increased the continuation funds that have sprung up. And so that's a solution where LPs get taken out so that they have more liquidity. And then private credit is really very strong, which is where we're focusing. We're doing private credit in Europe and very excited to be doing a sports fund, which is uncorrelated and really has no association with the slowdown in deal activity. And hopefully it's temporary, right? I mean, we don't know what's going to happen. I mean, we'll see. And I think, like Ida said, there are plenty of other opportunities to focus on. And if it's a situation where you feel that your LPs really want liquidity, there are options. There are options out there, and I think the continuation fund solution has really grown because of that.
Yeah. Okay, and Lynn, over to you over there. You sit at such a unique position to really see what's going on with markets, but also see what's going on with industry titans, business leaders. So I'm really curious to ask you about the intraday volatility, I guess. When we were in a prep call, you talked a bit about why you think you see it as your role to make sure investors are not feeling as fearful. Mm-hmm. Can you talk about why that's your role and that intraday volatility? Is that still? Are we still seeing as much volatility now?
Yeah, I mean, we're still seeing a tremendous amount of volatility, and the numbers that I've been using, because I'm a numbers person, when I first took on the role, a peak day for us in terms of incoming order traffic, so buys, sells, and match trades that hit us, was about 350 billion messages. In April, we had 2 days where we hit 1.1 trillion incoming order messages. So almost 4 times the peak levels we saw during COVID. So it's been like this period of hyper volatility, which has also manifested itself in trading records across the industry. The peak days, we've now seen 30 billion shares exchange hands a couple days in April, which is way up from the average. Average day is like 12, 13 billion shares, so like almost 3 times. Our job is to ensure that there's trade certainty, that there's liquidity, and that people can manage their positions as efficiently as possible. So we are hyper-focused. That's our North Star, to just add transparency and liquidity to markets. We do that through a lot of good technology. We do that through our differentiated market model, where our market makers, yes, there are guys still on the floor, that step into trades during periods of heightened volatility, but we're also seeing an increased importance at the open of a stock and the closed stock, because that's when positions get marked. So we've really focused our efforts throughout the day. You mentioned intraday volatility, but the opens and the closes have become increasingly important, particularly as passive investing has continued to grow.
And are you seeing this uncertainty driving people to alternative to public markets? If so, is that a worry?
Yeah, I mean, companies are definitely staying private for longer. I think that will be a longer-term effect of the hypervolatility bouts we've seen over the last 3+ years. But when they do come to market, the market welcomes them. If I look at some of our benchmark IPOs last year, Reddit being one, that company really sat on the sidelines for years. I know Alexis was just on stage. They looked to go out in 2022 before the hyper volatility started. When they came out, they priced appropriately, and now they're worth 3 times what they were worth the day of their IPO. So the public markets have rewarded them. Just this morning, we welcomed Circle to the public markets. It's another blockbuster IPO where in a day and age where people talk about the private markets, a deal like Circle comes to market, it upsized twice. It priced $3 above its revised up range, and it opened 3 times the price of where it was priced. The market's ready. It's just a question of, is the company ready? And I do think by staying private for longer, by having that alternative form of liquidity that is being afforded to the private markets, I think better companies are coming out. I think that's a good thing for mom and pop investors.
Yeah. Okay, well, the 3 of us spoke, or the 2 of us spoke behind the scenes right now. We said, look, let's scrap that typical question, what are you optimistic about? Because, you know, it's a difficult time. Like that is accurate. This times are difficult. But what I do want to know is, and this is for all of you, Ida, I'll start with you. What is one big investment idea that excites you, that is available right now, and possibly because of what's happening, because of these volatile times and this strange inflection point that we're at?
So one of the things that I talk about often is that we are in the midst of one of the largest wealth transfers in history right at this very moment. 100 trillion of wealth is passing to the next gen and millennials as we speak over the next 5 years. And of that 100 trillion, 30 trillion of that is passing to women. And what's interesting about the investment behavior of next gen millennial and women is that they are ultra hyper focused on investing with purpose, with impact, caring about the world that we're living in, that we're creating, thinking really deeply about legacies. And that is super exciting for me as I'm seeing the shift from pure alpha to purpose-driven, super contributory to the society type of investments. So you're going to see that continue to play out. And it's very encouraging, very optimistic for me to see that. But I'll go back to what I said earlier. If there's one play that's been talked about all morning, that would be AI and all the components of AI that are going to be driving so much efficiency, so much productivity, so much increase to GDPs around the world in the coming years ahead.
I like it. So there's something to be optimistic about. Sonia, same question for you. What is one big investment idea that excites you right now?
So I think you've had several panelists talk about sports investing, and obviously that is an area that, like we talked about before, is not correlated, and we are very excited about that. Not only is private equity being welcomed by the major leagues, and a lot of the rules have changed over the last few years, but we are very excited about emerging leagues. And one in particular, and it's not emerging because it's women's sports, women's soccer, but where we're investing is women's soccer in Europe. And women's soccer in Europe is behind where women's soccer is in the US, but we do think that over time it's going to catch up in popularity and valuations. And we invested in Mercury 13 as the majority investor. And what we're doing is we're acquiring up to 5 different women's soccer teams. And right now we have Lake Como. We're close to closing another, which can't disclose, but also very focused on the UK. And as everybody knows, right, the UK men's soccer, and it's called football, so let's call it football in Europe, and is extremely popular, and women's football is dwarfed by that. And we have Lauren Holiday, 2-time Olympian in women's soccer. She's on our board. And we're very excited about it, but excited about sports overall and emerging leagues, not just the established leagues.
Great. And then, Lynn, final question, same question for you.
Yeah.
What makes you really excited in terms of one big investment idea?
I can answer it two different ways in terms of business investment as well as portfolio. I'm continuing to be excited about the ETF wrapper, quite honestly, particularly when I look at my own portfolio. Last year, we listed the first Bitcoin ETFs. Then earlier this year, we listed the first private credit ETF. You know, that wrapper for less liquid assets is such a great wrapper. It really democratizes investing and allows a much broader universe to get exposure to complex asset classes. So it's not just about equities, it's about Bitcoin, it's about fixed income, it's about, you know, private credit. It continues to ramp up in terms of issuance and in terms of creativity around the types of investing that you can do, which is a great hedge for your portfolio. I think the energy and defense sectors are just incredibly fascinating at the moment. You know, from our parent company perspective, we run the largest energy futures businesses globally. So the macro trends of brown to green, the globalization of natural gas, and the fact that in the next 30 years, there's going to be 2 times the demand for energy than exists today, driven by AI, driven by all of these other things happening. Feels like it's just an underappreciated story. So I think that's incredibly exciting. Everything around defense with cyber, that's an incredibly exciting area. So all the innovation that's happening in financial markets always excites me.
Yeah, so we're almost out of time, but the common thread that I'm hearing here is there is real opportunity. It's just looking at new investments, new ways to invest, new areas. What is your advice, though, for folks who are a little bit worried?
Breathe.
Yeah.
Breathe. I mean, this country is almost 250 years old. Breathe. We've been through this before.
Yeah.
We'll get through it.
Yeah, I agree. I mean, perhaps it's different volatility, but we have lived through much worse and survived. And I think that it's because there's an unknown and things are uncertain, but we've had that before. So like Lynn said, yes, breathe. That doesn't mean run out of the market, stay away from the market. There is plenty to do, and like everyone talked about, there's a lot of exciting opportunities.
Yeah,
And as Sonia and Lynn have articulately said, these are times also for investors to jump in and recognize some of those really unique opportunities. And it's not just about diversification of asset classes and types. It's also about diversification as you think about globality and different markets that you're in, even currency diversification. So there's a lot of different angles and different opportunities for investors at this moment. So we're actually very excited about what's to come.
yeah. Okay, well, unless anyone has any last words of wisdom for this moment.
Stay invested. Don't panic. I mean, a lot of people, it's easy to turn on the TV and think the world's coming to an end. The fundamentals of the US economy are incredibly strong. The world's not coming to an end. It's just a little noisy.
Volatility drives opportunities, and go out and seek those opportunities and invest.
Yeah, I agree. I mean, it's like I said before, because it's unknown and things have flip-flopped to some degree, I mean, in terms of some of the volatility, but it's all going to be fine, right? And I think most people feel that way, but there are people, like you said, that are scared. So stay invested and invest in unique opportunities.
Well, there you have it. There's your advice for how to play the long game and win. Thank you very much.
Thank you.
Thank you so much.